Hi guys, just enjoying a Subway sandwich today and thought, why not talk about gold? So I watched Ron's Basement this morning, his video about I am depressed, which is hilarious because anybody in the gold sector can relate to that. Anybody who has their money invested in gold stocks knows exactly where Ron's coming from. And I think I'm just guessing that Ron, like a lot of us, are probably waiting for the inflation statistics that came out on Friday, which was the highest inflation like in decades and decades and decades, and gold didn't do anything. And so gold investors were like, what do we got to do to get this gold to go up? So I want to give a couple of my thoughts and also my sort of thoughts on what the outlook is going forward for gold. Gold is a volatile sector. It's very much tied in with the price of gold. I mean, the gold mining sector is what I'm saying. So, a lot of times we talk about the fundamentals. We talk about, this company and the free cash flow and, the balance sheet and the all-in sustaining cost. And, oh, my God, this company's great. None of that really, I shouldn't say none of it matters. It absolutely matters. It absolutely matters. But that's not what's really going to determine the price of these stocks. Gold mining stocks are lockstep in barrel tied in with the price of gold and where the market thinks the price of gold is going. Right now, the reason that the gold stocks are not reacting and that the price of gold is not reacting as miners and gold bugs think it should is because the market really is buying into the Fed narrative still. They think that the Fed is, Jay Powell, the last time he came out and talked, he was very hawkish and sounding like, oh, we're going to speed up the taper and we're going to really, get tough. And they're expecting them to get to speed up the taper, okay? Quicker than they're going to stop these bond purchases a lot quicker than what they had said. And then the market's expecting them to start tightening and possibly start bringing down their balance sheet, which means selling the, all those, treasuries or some of the treasuries that they have on their balance sheet. So because the market is still buying into that narrative, because they still find the Fed credible, that's why they're not investing in gold, because they think, why do that? Because if that happens, they expect the price of gold to go down. Now, here's the thing about it too. It's not just, we can be skeptical. We can say, oh, the Fed's bluffing. The Fed is not going to go that way. And that absolutely could be true. In fact, I personally believe that. I believe even if they're not bluffing, that they're not going to be able to successfully pull it off. Like, even if they start down that road, you're going to have just like 2018, where they ended up having a taper tantrum after rates got up to whatever they got up to. I mean, at a couple of percentage points. And then they had to do a 180 after the stock market crashed and start, they had to bring rates down, a mid-course correction and all that. Peter Schiff has talked about all that in recent podcasts. But it doesn't 100%. Here's my immediate outlook for gold. And I got this partly from listening to Macro Voices the other day. Julian Brigden was on there, and he said, well, he didn't think it was yet time to get into gold because he thought that the Fed was going to start tightening and that the market would react to this by, selling off gold, and that the price of gold would go way down. And then he thought, well, that's when you buy gold. Now, I think that's a totally plausible scenario. Now, here's the thing. I wouldn't be waiting for that to happen to be buying gold. The gold stocks are cheap now, just personally, and I'm not telling anybody else what to do, and because everybody's situation is different. In my situation, I would rather be in and have it go lower before it goes higher than to wait, try to time it and get the very bottom and then find out, whoops, I was wrong, and the market shot up, and left me holding my money on the sidelines. And now if I want to get in, I got to pay way more. So I think it's very plausible that this could happen. So let's just kind of game this out. On the 15th of December now, we're waiting for the next Fed. It's either the Fed meeting notes or an actual meeting, or something's going to happen with the Fed on the December 15th. We're going to find out whether they're hawkish or dovish, or whether they're going to announce a speeding up of the taper, an acceleration of the tapering of their QE purchases, and whether they're, possibly some hints about whether they would start to tighten in 2022. Now, if they continue along this path, let me give you a couple of different scenarios. And this is why I'm invested in all in on gold stocks right now. Scenario number one, they announce an acceleration of taper of their QE purchases. And let's say everything goes right for them. So they kind of hint, hey, we might do some earlier rate hikes than we thought. And let's say they start down that process. Gold will sell off a little bit more than it is. Maybe it goes down to, the mid 1700s to low 1700s. Because people are thinking, okay, the Fed's tightening, this is going to happen. And rates are going to go up. And then let's say as they start into this process, the market does not tank. The market's hanging in there. And then we get 1 or 2 months where inflation seems to top out. Maybe it's been going up. It was 6.8%. Let's say it comes down. Maybe it's like 6% the next print. And they have 1 or 2 prints of inflation like that. And then people say, oh, look, the Fed's narrative, it's all playing out how they said. Inflation is coming down. They're going to raise rates. So those two things are going to meet and everything's going to be fine, right? They're going to be able to curb inflation, and, the supply chain problems are going to get worked out. See, if this narrative goes, even if we're early in the narrative, the market will look ahead and say, oh, everything's going according to plan, and gold could go below. It could sell off below. We had the double bottom earlier in 2021 of about 1675. It could go lower than that. And if it goes lower than that, gold stocks are going to go way down. I mean, that's how it is. So if that happens, am I going to sell off my gold stocks? No way. I made that mistake with oil. In March of 2020, I was heavily invested in the oil sector. Oil stocks sold off, went down, I was down like 75, 80% on some of my stocks. And I listened to CNBC, these guys, and they're, there's no future in oil. It's dead. Sell all this stuff. Kramer was talking about, I don't recommend any oil stocks. And I listened to all that, and I got all depressed, like Ron in his basement with his poor gold stocks that are getting slaughtered. And I sold. And you know what? That was the stupidest thing I could have ever done. Look at what happened with oil. A year and a half later, all those stocks were way up. If I would have just held those stocks, I would have had like massive, massive profits. Instead, I sold at a loss. So it's like the old thing. You buy when there's blood in the streets. Buy when nobody else wants it. A lot of these gold stocks that have excellent fundamentals, they're at like 52-week lows or close to 52-week lows. I mean, look at things like Newmont Mining, or look at Agnico Eagle and some of these others. I mean, these are like the cream of the crop, the best of the best. Their balance sheets are pristine, and yet they're selling so low. Now, if the Fed starts to play this out and we go into Q1 and Q2 of 2022, And it looks like, oh, the Fed's plan is working. Inflation seems to be coming down a little bit. It's not as hot as before, and they're completing their taper of bond purchases, and they're starting to raise rates. They do a couple of quarter-point rate hikes. So let's say the Fed funds rate gets up to 50%, or maybe even they do 3 hikes, and it gets up to 70 or 0.75% interest rates. People will see this narrative, and gold could really sell off. And if that happens, it's going to be a buying opportunity. Now, in my case, I have a pretty steady stream of income coming in, so I don't mind being all in on gold, because even though I may be on paper losing money, I'm going to be able to have more cash to put in to buy these. So my cost basis just keeps getting lower. And I mostly stick to the majors. I stick to the quality companies. I'm not messing around with a lot of juniors and speculations. I'm not trying to hit home runs here, because when gold, if you buy these good majors with the solid fundamentals and the pristine balance sheets, and gold takes off, you're going to hit a home run anyways, okay? You don't need to be trying to get too greedy. So I'm not going all in on some speculative junior that may or may not have a functioning producing mine someday and get bought out, and trying to get that big premium. I mean, that would be great. And I do have I've got some money in Alamos Gold, which is kind of that's sort of a play a little bit, I guess. And I've had some in the past. I had money in Rox Gold. I had money in Alexco Silver for a while. Alexco, I think it's. So anyways, I've had some of these. I did buy into Fortuna silver mines recently because of the huge drop. But that's kind of that's kind of a sort of a different story. But anyways, I don't want to get off on that. Now, let's paint another scenario. So people say, why don't you take all your money out of the gold sector and then just wait for this Fed narrative to play out in Q1 and Q2, and then maybe when there's a big drop, like Julian Brigden was saying, at that point when there's blood in the streets even more, then go buy. The reason that I personally, that's a strategy, totally legitimate strategy, and it could happen. I think there's a good chance that could play out like that. Here's why I don't do it. Because I can easily see another scenario, and that scenario goes like this. The Fed announces their taper, and then they start to do the taper, and then all of a sudden there's a market reaction. Something happens, and this is how it is. There's so much potential for fear trades. There's so much. The market to me is like a powder keg right now. It's just waiting, and any negative thing that comes up that spooks people, especially if they advance this taper, if they get this, they start selling off if they start bringing down their bond purchases, we could easily get an accident in the market. The market could sell off, the equity market could sell off, and the accident could be in the bond market, but that could spread to, from the credit market to the equities, whatever, We could easily have something happen, stuff starts to go haywire, and all of a sudden the Fed gets spooked, just like last time, and comes out and says, hey, okay, we're going to put on the brakes, and we're going to either stop the taper or we're going to start easing again. If something like that happens, and then the market says, oh, wait a minute, this plan that they had is not going to go as planned, if the Fed's narrative loses credibility, you could see gold go up. I mean, that could turn around on a dime. And, I don't want to get caught. It's like the old thing about you don't want to, let's just say it this way. Peter Schiff has said a few times, and people will say, oh, Schiff's been wrong. He's been wrong. Schiff has said, but I think he's right about this. He says, look, you don't want to get caught on the sidelines. When the rocket ship takes off, it's not coming back to pick you up. When the train leaves the station, that's it. If you're either on the train or you're not. And if you want to, at that point, pay to get on the train, you're going to pay a lot more, right? So I'd rather be in before the bottom and then have it go somewhat lower before it goes higher than to be waiting for the bottom thinking, I'm going to get in, I'm just going to wait till it starts going up, and then have it shoot way up and I missed it. Okay? So anyways, that's my thoughts. I could see either one of these scenarios happen. And I would rather be in and I have more money coming in, so I can put, even though, it's not, I would make more if I kept all my money in cash and waited for the very, very bottom and then try to get in. You can't time the market. I mean, just look at history. I mean, just how many times do you successfully time the market? It is so hard, and yet people always seem to think they can do it, and it just never fails. The smart people that I listen to are just honest, and they just, you just don't know. That's why you got to at least have some skin in the game, and then you won't get caught flat-footed if there's a big, fast move. So, anyways, that's my thoughts, and I would just say to Ron, cheer up, Ron. When gold takes off, I think maybe good times will be here again, and maybe your wife will let you come out of the basement and you can start doing your podcasts in the garage.